Recording. All right, everybody, welcome to webinar 6. Fantastic week. All Bitcoins and cryptos are down, I believe. So that's pretty sad. Yeah, chart colors inspired a little bit by Vetsky with the POIs. I like the little refined versions of them. Quite clean. Feeling good about the the chart colors. Definitely ups the psychology. So gold over the week, as you all know, we were looking for it to come into this deeper area right here. Sadly, we didn't get that. However, we did begin to see signs of accumulation prior over here. And if a lot of you remember, I believe I sent it out before this happened. I'm not sure. Let's just go take a quick little look. Colors make the chart look professional. Good. That's what I'm aiming for. Go find the gold trade if it did happen. Where was it? I hope I sent this out. I don't remember that much. Oh, there it is. Yeah. So we did send this out right here. Looking for price to come into that. Where is that? Let's open this up in original. So off of that 1 hour break right here, we were looking at this overall demand zone. Price came in and gave us a Wyckoff accumulation in here, began to break higher, leaving behind this inefficiency, leaving behind this last down move before the up move refined to that area that had not been mitigated, draw it out across. This actual line was actually 50% of this candle right here, this last down big candle. So somewhat of a mentfx block interpretation as well on that, right? Because we, again, put confluences together to understand our potential best area of mitigation, looking for price to come into there and continue higher. If a lot of you remember, I actually had another buy that was up here somewhere, and that one got liquidated like instantly. That one went to shit. I don't know if I can, maybe I can find it really quick. Let's see. Was it this one? Or was it? Was this gold too? Oh yeah, so it was this one. There was like something inside of here. They gave us an entry, and then that one got stopped out, and then that lower entry did get hit. So it's fantastic. But if you all take a look at this now, we can go and take a good look at this. Again, here's that image again. Remember it very quickly, get it into your minds, and then we'll go over here, go to that 1 hour chart. No, I think it was a 15-minute chart. Go down into these zones right here. Again, noticing how structure came down into this zone, began liquidating areas and started to potentially shift. So we're aware that this last demand zone right here from this wick to this wick can most likely function as a potential area where prices can go higher from. And from there, inside of that on a 5-minute, as you all just saw in the image, we had this accumulation take place. Again, I just look at it now from a standpoint of liquidation, right? And the breaks higher. But if you want to go in and label this, then you most likely have some kind of stopping action. Maybe a selling climax, AR, ST, or STB, whatever you want to call it. SOS in phase B, ST and B, spring, the breaks above, potential tests, moves away, and then the real test actually happens here. But as you can see, that entry, again, based off of just that last down move before the up move, unmitigated, everything the same. Or if you had used the 50% rule and just drawn it out, you can see exactly how perfectly those those candles came, tapped in, and just after grabbing the last few orders in there, took off to the top side. And as a result of how this entry actually played out, again, it ran God knows how fucking much, ran all the way up into the areas we were expecting it to run into. So if we just go out to the higher time frames, you all remember that we're looking for price. I think it was even off a weekly, maybe. No, it was off a daily. Yeah, so we were all expecting prices. We can like forget about this thing for a while, but we were expecting prices to make a run up into this supply zone right here. And as you guys can see, created the down move, started going higher, came into it to mitigate, kept going higher. If you notice, we had this area selected, wanted to see it come lower, but always understanding that price doesn't have to come into here to go higher. It can also play within prices up here, which is why we were watching that short term, which also meant we managed this position as a result too. So if a lot of you know, because I was going to bed at this when I took this setup, it was actually just to here. So that was really sad. But we did have the areas we wanted met. And of course I partialed along the way. So based on how any of you caught that or managed it, you were able to take that to the top side. And if any of you remember, Friday, we actually began to see this area get tapped, saw the movements away, and I actually took a sell up here on the retest of the mentfx block right here. As you can see, just about a little bit under 50%, but it came to tap it. And after, I believe, this move right here finished with this new structural low being put in place, I broke even on this, and it came right back up to hit me out of break even and closed and basically just close. So, I mean, I'm still expecting overall potential bearishness. However, again, because of the largeness of this area and because it's a daily chart, remember the rule of 30, whatever you want to use, we have to give it ample time to actually potentially set up if it is to go lower. So even though this might have played out already as a distribution or whatever, this can very well also be a stopping action, right? Like a preliminary supply or something on a higher time frame that's going to now become a potential buying climax, right? AR, ST, whatever, UT, UTAD, and so on and so forth, and then have the real drops. And if this isn't going to happen, the bias remains to see prices continue up into the areas here, which means that whatever happens along the way, demand zones are amazing for topside prices to be met, right? Again, understanding that our bias is consistently flexible, that our bias revolves around how the market develops, not just on the fact that markets go up and down or hold in structure always. So very quickly, you guys can start asking questions, whatever you want. We'll work through some stuff. Maybe we'll do some top downs on some stuff that you guys are interested in. If you do want top downs, just put down like a pair or something, or a market. I'll take a quick look at it. Maybe we can compare. Maybe you can send out a certain idea. Be more than happy to take a look at some of those, especially since we might not have too many questions. I'm going to very quickly go into the webinar questions and actually just work through them to see if we've answered any of them before, or we've ever missed anything. So we'll just start with that. And also I wanted to talk to you guys about somewhat of a new concept, but I mean, it's the same type of stuff about hidden supply and demand zones, which will definitely help us a little bit, or help a lot of you with picking out more POIs or understanding why price mitigates a certain area without coming into a deeper area that you might have selected. So it's more of a little bit of an advanced topic, but I'm sure a lot of you will find it helpful, and maybe I'll end up adding an extra part to section 2 to complement this idea. But I haven't tested it too much, but I've noticed that it works pretty nicely. So let's look through some of the webinar questions here and just take a quick look at that. Let's see. Do you ever use risk entries, or do you always wait for the confirmation of the Wyckoff? Also, when looking for an entry after the confirmation, do you usually enter on the retest of the new MB, or look for a deeper retracement to a fresh supply zone or demand zone? So first of all, do I ever use risk entries? I mean, like, the reality is once you have Wyckoff form, your entry is a risk entry, right? Even though it's based in a confirmation. So, I mean, yes, but I never myself set a buy limit or sell limit at an actual POI, just because I understand the idea that a POI can exist and can be mitigated very quickly and doesn't have to actually function as a POI that has proper displacement of price and the transition of those weak hands to the strong hands. So anyone that's read the Wyckoff book knows exactly what I'm talking about, and how strong hands accumulate tons of orders, and how you can literally watch price give you that before getting involved, and that understanding alone should shape your understanding that you don't really need to risk a risk entry, at least for me, but you can, right? I mean, a lot of you have seen Vetsky this week. He's just been killing it off of risk entries, working in ranges between just structure breaks, and that's fantastic. It can work very well. For me, myself, I like the confirmations because I like to see this transfer of orders, and that means that I'll stay out of more trades. It also means that I will miss great moves, but it also means that when I get involved, I understand why I'm doing it under my own rules, right? Because trading is anything, it's following your own preset guidelines and rules. Your second question, also when looking for an entry after the confirmation, okay, so confirmation happens, you're looking for the entry. Do you usually enter on the retest of the new MB or look for deeper? So this is something I've spoken about in the past. Oftentimes I will open a very small position on the MB and expect a deeper retracement into the zones. If you watch the backtesting video, I pretty much use that more so, is looking for that break and looking for the areas that caused that, and spreading out the position between them. And again, that's all perspective based, not financial advice or whatever. Okay, let's take a look through some of this because I want to actually work through some of this stuff here. It's a little bigger. What we got? Dogecoin. Okay, we'll look at that too. GU. So a lot of people want a GU, EU. GU and EU, pretty much. I haven't looked at GU in so long, but let's take a quick look at it. Why not? We'll go with FXCM. All right, let's delete all that stuff. Go to the monthly. Take a look what we got here. Okay, so liquidity grab, generally bullish, however, rejecting from the last supply zone right here. Very easy to see that. This is the supply zone that's being rejected from, so more likely than not, we're going to see this reject into some deeper price action, such as maybe a fill of this imbalance right here. Other than that, I don't really see anything too good. Maybe that comes into this hidden demand zone. So this is something that I'm going to talk about today with you guys. But overall, most likely something along these lines right here. I'm going to expect overall bullishness on this as well, to come and start clearing or mitigating some of the orders that exist up here, some of the orders that exist in here, or I mean, you could probably use this wick too, right? So we can just kind of work this through. The liquidity that exists, like above here, and long term get back up into some of the areas up here, to fill in the imbalances in these zones right here. So we'll get rid of this stuff. It's not really important. Overall, you can see how well price filled in all this. So if we do see upside potential, it'll be really to go much higher. So it'd be very bullish bias if I do see this break right here. Otherwise, we will continue this bearish move. However, overall, as we're mitigating this, definitely bearish. And if we are to aim for certain areas where that bearishness might take us, I mean, this is just, I hated GU the last few weeks, the last few months, whatever, because of this. You know, I like to see this type of price action because it clearly shows us where we can expect mitigations into. Due to the way this has moved, like, this is just ugly. It could be aiming for here. It could be aiming for here. Could be even aiming for maybe even here, right? There's, oh, and maybe even, did this get mitigated? Not really. So like maybe even this zone here, right? There's just a ton of mitigation that it can come to, but generally it appears to me like this wants to move bearish for just a bit. And if we refine this again, you can see exactly where price went. If you kept refining it even to the last up move, the wick, you can see exactly where price went and why it went there. So generally we understand that this was a mitigation of that higher area up here. We can just notate that. Since that already happened, I don't want to have a box on there because it just confuses me a little bit. We have that mitigation, and we can take a look at how that mitigation occurred. I actually looked at this a while back, and the Wyckoff here is just absolutely disgustingly ugly. If you tried to look at it, you could maybe see something with these highs being taken out, and then you started to see these breakdowns, leaving behind areas up here. Started to make some equal highs, breaking down lower, leaving behind new areas that it came to mitigate, breaking down lower, showing us that, you know, there's equal lows here now too. So overall, simply from my end, you're either looking for this to be mitigated right now to go lower. Let's set this up right here. There we go. So you're basically looking for Wyckoff in here to go lower, or you're looking for breaks higher, which I think will then end up running for the liquidity here and run into the mitigations up here, right here, which will also fill in the inefficiencies that exist right above these liquidities. So this is like, so what usually happens is you'll have some liquidity print in a certain area like this, right? A lot of liquidity, and above that liquidity is an inefficiency that needs to be filled, and that's why they do it, right? So then when they do send prices up there, not only do they fulfill the orders that were not fulfilled earlier, but they also grab other orders on behalf of retail or dumb money or weak hands, whatever you want to call them, right? So if we do have price begin to play up and break through this, we will begin to use demand zones that form along the way to look for Wyckoff accumulations into there. And those Wyckoff accumulations overall will most likely end up being redistributions, right? Because this is how we end up in biases. And we will look for it to continue breaking down lower until some lower areas met. Because again, like I said, very hard to target inside of this due to the way that prices moved. But overall, looking for this to keep going down until it finally gives a solid accumulation of some sort, or begins to break even higher to give you accumulations here to continue to new highs, just like we're expecting EU to keep going and making new highs to start mitigating some of those areas up in those zones, right? So generally something like that off the daily. Again, as you do top downs, this is why I only look at one pair, by the way. There's so much that you can look at. You have to tell yourself a story about what's happening. Otherwise, you can get very, very lost. Take a quick look at something here. Okay, cool. So yeah, we can refine this in 1 second, but that's what we're inside of right now. This is the liquidity that I think we want to aim for, but also we have to be cognizant of the fact there's a ton of liquidity here. It did get grabbed just a little bit, so maybe it's been grabbed. I don't think it has been. And if you notice, this liquidity was formed just above this last down move before the up move. And remember, a wick itself is its own demand zone. So if we are to come lower it's going to be into here where we can look for buys, right? So we're either looking for sells into here to come into here, or we're looking for buys into here to come and start clearing out this liquidity and tons of fucking liquidity up into these zones right here, right? So that's the GU. So basically, whack off in here for sells, whack off in here for buys, whack off in here for longer term sells, from my end, at least, based on what I'm seeing here. If we go a little bit lower, this is kind of the last time frame I'll do, because there's no point to get like crazy low. We can see that there was a accumulation that occurred here, and if you had been watching this, as this began to break higher and broke through a few structural points, putting in a few mentfx blocks, putting in a few new structural highs, potentially shifting order flow bullish, especially after this wick did clear out this low and this low, then you would have been able to use this perfectly left behind demand zone, unmitigated, right here to get into these buys. So anyone that did that, fantastic. If you didn't do that and you saw this form, you can see how that also played for a perfect buy. So there was a lot of buy opportunities there, and more likely than not, based on this lower time frame, we can now anticipate that price is making its run for either, right? So this is where the refinement comes in, either this point right here, we can delete this right now, or, right, remember the wick rule, this point right here. So we're tapping into that right now, clearing out the liquidity here. I'm more likely to go for the buys that come into here before the sells down, right? Just because this has been mitigated at the open, I believe, just ever so slightly. So I'd keep that in mind. But if you do begin to see some distributions here, I'd be happy to take that lower into some of the points down here to fill in some imbalance inefficiencies, maybe to either accumulate here to go higher, or to finally start clearing liquidity to get into those buys down here, right? So again, we're just showing you how fractally to work with timeframes and stuff like that. But overall, we are mitigating, right? Don't forget that there's a larger, supply zone up here. So don't forget that we're actually mitigating the whole thing as we're also clearing liquidity. So if we do see clears and breaks, we can anticipate those bearish price action moves that come to clear liquidity here, so on and so forth, right? Again, liquidity exists everywhere, and the liquidity that you want to aim for to be cleared is going to be based on what bias you color or draw out for your overall thing. Now, if you look at this on a higher time frame, some of you might see this, some of you might not. There's a distribution here, right? Highs, 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 all cleared, big breakdowns, and right now we might be coming up for a test, right? So again, we're distributing into the test of this UTAD, if this is a UTAD. So again, overall, throughout the beginning of this week, you can look inside here on lower time frames for potential buys up at certain areas, right? Looking for wyck off at these points, that's what I would be doing. Otherwise, looking for it to come into here and then looking for sells here. Again, managing your positions with partials along the way, and potentially looking for re-entries at new supply zones if they are to form and be presented to you, right? So that's the overall GU. Hopefully that made some sense to you guys. How many pairs do you trade down on? Just one? Yeah. I only just do gold now. I just look at gold. Unless it's like weekend, then I'll look at XRP. Or if any of you are looking at something, then I definitely look at that too. But GU, everybody happy with that? Makes some sense? Is that cool? We can move on to some other pairs now. Everyone understanding where the bias lies and how we're looking at it overall? Okay, fantastic. So hopefully some of you have some similar stuff. Do you correlate with DXY? No, I do not. I don't care about correlations like that. Recognize it. So something I say about this all the time is, listen, if you're going to analyze DXY and you become bullish on it, well then you know you're going to be bearish on GU, right? There's no question about that. But the thing is, if your DXY analysis is wrong, your GU analysis is going to be wrong anyway. So why not just analyze one of them and either be wrong or right on it, right? Overall, you're still using the confirmation. So like, I never understood the idea of looking at DXY and then comparing that or correlating it, because the reality is if you look at DXY wrong, you're going to be looking at every other XXX-USD pair wrong, right? So either just be wrong on one of them, or, you know, why be wrong on all of them? It doesn't make any sense. Unless you're trying to trade DXY, in which case, you know, go for it, but just go analyze DXY. It's the same thing. Tell with your analysis. Okay, nice, perfect. So yeah, that's how I'm looking at this this specific market to be unfolding. But definitely, I do think these want to be targeted. So distributions here to get down into these zones here, to me, make a lot of sense. Again, doesn't have to. It can easily just continue way higher. But if it does, we understand that we can catch the buys up into these zones. So let's take another look at something else now. Hopefully that gave some of you an idea about how we can conduct some analysis. First webinar today. Hey, nice, man. I'm happy. All right. So we started with GU. Let's take a look at EU now. So I'm actually going to save this down. Get rid of some of this stuff. We can get rid of GME. We can get AMD, WPF, Marvel. UJ. All right, so let's just start going through them. So this was GBP USD on FXCM. Fantastic. That's done. Let's look at EU. So let's just draw out a bias here so we understand what the bias looks like. Overall bias is to see basically something of this nature to occur, right? This, or to see something of like some accumulation here into a demand zone that forms off of these breaks, right? Coming into the mentfx blocks here, or this overall mentfx block, right? We're always remembering that we're using all these things. Like, I'm not talking about them always when I'm doing top down because they're ingrained in me now, but understanding that we're utilizing all the concepts here anyway. And the breaks higher into here, that we will then look for, again, distributions to then come into the zone, right? So either way, the belief is that we want to get here, and the way we do that can be a number of ways, which is, again, why we always stress management of your positions, because you have to recognize price can be delivered to you in a number of ways. Otherwise, if this does begin to break, then you will understand that we will look for, same way, breaks, and then either retracements deeper into demand zones or mini retracements that will, again, end up doing the same thing to start reaching up for those higher areas. But we don't have to worry about that one because for this week, at least, this is what I'll be worried about, right? GU's done. Let's look at EU. So let's go to Euro US dollar. Take a look at what we got on the EUs. Again, shit, I analyzed this a while back. Maybe I have an analysis still done on it somewhere. Let's look at this. Do I not? That's so sad. I really don't, do I? Did I delete it? Maybe on a Wanda? Hey, sweet. Thank God. So, if this loads though. Let's take a look at what everyone's saying. Perfect, perfect, too easy, nice, same look, nice, nice. Touted my analysis, perfect. As you mentioned, trading ranges like Vetsky, what would be a good practice? Like choosing the highs and lows of the previous session, or an example would be awesome. I'm sure Vetsky could provide a little mini example to you guys, but honestly, just, you know, go into price and watch for structure and use risk entries off of structure, looking for structure to hold, looking for structure to hold, looking for structure to hold until it finally fails, looking for the retest of the failed structure, retest the failed structure, retest the failed structure, so on and so forth, right? Like, I guess that's what he was doing, because again, like, I don't trade ranges like he does. A lot of people trade different ways, even in the group with the same concepts, right? So it's all about going about a market your own way. But overall on EU, nothing has changed too much. If we go up into the higher time frames very quickly, it stops lagging out. Oh yeah, Arnold. So, oh, these colors suck. So sad. Oh, this is from the back testing. Nice. So overall, as you know, off a higher time frame, we just broke this structure here, right here, a long time ago, back in 2014 and 2015, and more likely than not, this is all a slow backup all the way back up into this area to keep going lower. If that is, you know, we're still bullish on this. However, we just hit this supply zone and we're looking for that move down. A lot of you are buying here expecting this high move. That's fine. I'm still expecting it to come up to test some areas here before actually taking off lower into these places here and then continuing higher, right? So I actually do want to see it come down into these zones here. Let's get down a little bit lower. The daily, as you all know, ever since we got down here, we were looking at all this is a large accumulation. And as we were looking at that, we know that it was tapping into these last down moves before the up moves, right? So that's what this was, and we were expecting it to come and grab this. Overall, I'm expecting it to fill in more of this inefficiency right here to finally tap into these supply zones up here. And again, same thing goes, kind of like GU, looking for Wyckoff to go lower, looking for Wyckoff to go lower, looking for Wyckoff to go lower, because I believe that we want to clear all this as liquidity, not to continue significantly higher, right? So that all still stands. Nothing insane on that end. 4 hour, as you can see, it might be distributing right now. If we do get something of this nature, right, I will look for sells in these supply zones off of Wyckoff, right? And that is your more likely than not outlook on that. And if you notice, you take a look at the left, right, mentfx block. Inside of that, you have multiple areas that you might be able to use. Really, it's kind of just this area, unless you want to refine more on lower time frames. So as you can see perfectly, though, we're forming liquidity just below, again, an imbalance and a zone, looking for it to come into here. Now, again, it doesn't have to It doesn't have to form here. It can keep breaking higher, and if it does, we're looking for buys at demand zones to take us up into, notice what we have here, the same thing, right? And you have this zone you can aim for, and this zone you can aim for. So that would be the expectation there. Lower time frame distribution, yeah, exactly. Right, but even on the 4 hour here, you can already see it's starting to distribute, right? Like stopping action, highs, liquidated, break potentially, lower time frame distribution, and let's transfer those hands into those lower areas that we were looking at to get tapped a long time ago, right? Because this is all still inefficient price action, all inefficient, and just because it's here doesn't mean that price has to tap into it and go higher, but it can mean that these distributions can be part of meeting these zones for the mitigation of all those prices or points. So makes sense on EU, guys. Pretty much same thing as GU. They move somewhat similarly. Again, we're tapping into a high time frame supply zone. We're moving lower from there, more likely than not expecting lower prices, however, are flexible with the way that price is being delivered to us, right? Everyone on the same page with EU and GU now? So everything's pretty nice there. Yep, very nice. And again, for a lot of you that are even new and stuff, I highly recommend starting a little like mini Excel sheet or something for yourself. I just did this one this week just for the sake of it, just to take a little just to have something that I can like show with you guys, and basically just record some of this stuff. Go find the time frame that you find the trade on. I did a few time frames, as you can see, 1 hour, 1 minute, 1 minute, 5 minute, and a 5 minute, and just go through them and see what happens, right? So this was the before. Let's see where it is. There it is, right? The before, I had we saw this accumulation here. I was on a lower time frame, tapping into this previous demand zone. Sorry about this thing in the middle. Tapping into this previous demand zone, shifting higher, looking for buys from here and here, because I was unsure about which one wanted to hold. This is one of those things. You're never sure about which one wants to hold, then separate the positions. One here, right? So let's take a look at what actually surpassed on that. We open up the after, and right, it comes in, gives us a little tap. If you broke even on this, fantastic. I did not. So takes that out, comes right into that lower one that we had selected, and takes off just that area as we anticipated, right? So EU delivered whatever, you record that, and that's fantastic. XAU USD on the 1 minute. Let's take a look. How do I open this? There we go. XAU on the 1 minute. Sell from here and a sell from here, right? Two areas that you're looking for sells from. Go ahead and open this up. And there you have it, right? We actually sent most of this out like as we locked this in along the way, and the partials, because we were looking at to meet the 50% of this higher demand zone, and you record that right here. Similarly, gold 1 minute sells from, I think I had to sell here and one a little bit lower, and then we go and take a look at that. Let's see what this one did. What's a great way to record some of your stuff? Oh yeah, okay, so this was actually, if any of you saw this, this only happened on the forex.com broker. So if you were on that broker, then fantastic. If you weren't, this was actually just only a partial here, and then it came right back up to break even here without making this move. So this was just broker price difference, broker manipulation. That's going to happen. But again, just record that stuff and understand, just recording this helps you a lot of the time see how your results would stack up, right? XAU USD on the 5 minute, let's take a look. That's the one I just showed you guys, right? That area, the 50% of that zone. Take a look at how that played out. Again, that's the first one. So this is actually what I spoke to you guys about. I had an entry here off the mini or Wyckoff that failed right here. And then it came in for that second entry perfectly and took off to the masses. And again, I only locked it into this high, but you saw how much further it ran. It ran like fucking God knows how long. So this is why I always say, always leave something to run, because like even your 10% that you leave on a trade can run to make you another 200% or something like that on an account, right? So that's like really nice. And then this weekend, as you all know, we all got milked by the cryptos. Look for a buy off this right here. And then it just kind of took off right through it. So that was that. But again, you record these things and all of a sudden the loss kind of becomes a joke, right? This is the importance of understanding how our management and understanding this market plays out. Please don't explain it. Please don't forget to explain the hidden demand and supply zones. Okay, so that's something I actually did want to work on with you guys and tell you about. And this might be confusing to some people, so you know it's up to you if you want to use it or not. But ultimately, what you need to understand is, let's get out our handy paint tool. So think about price for a second. You guys can see this happen on a higher time frame without going to a lower time frame to find the specific zone. this right here. So you have prices coming down extremely heavily, okay, maybe making some kind of low, taking that low out, then coming in and taking the highs out, and then continuing lower. Now, a lot of you know this as distribution. In this case, it would be a distribution without a test in this specific case. Now, you can see this right here. Where are you journaling? It's just online Drive, the Excel that Drive provides you. It's free. But what you see here is this right here, as you all know, would be, in our case, a supply zone, okay? Because prices went lower, and we'd be expecting the move that comes up to mitigate it either here or even higher into some of the zones here, right? To continue significantly lower. Now, how do you view the specific zone on a higher time frame without having to go to lower time frames and trying to find this on your own? Well, this on a higher time frame will look like this, okay? It'll be a down candle with a wick, then another down candle, okay? And a wick. Now, your actual supply zone is from this wick to this wick right here. So that's your hidden supply zone, and that happens the other way around, right? This is the same as this, okay? It's another way to add POIs to your overall biases, but you have to recognize that this will actually add on a lot of POIs because this happens a lot of the time. It shows you very, very fractal areas in markets where this type of thing occurs. So let's take a few looks at that just very quickly. And I'll show you guys exactly how it looks. So I want to find unmitigated ones that had this respected so I can just explain it to you guys a little bit better. But examples of them is like this right here, right? So notice how price is breaking down. There's no real supply zones here, but if you follow it, you'll see this wick to this wick is one of those zones. And notice where this price right here goes before going lower, right? This is a test of that overall distribution inside of fractal area. So again, it's a way to view extra POIs. That same thing, right, is right here. So you would look at this and you'd see this demand zone. But what you also notice, if you see this wick and this wick, this itself is a demand zone right there. And notice where price comes to mitigate first before coming a little bit lower. So it's not always going to be perfect as well. This is why you got to be a little bit careful about these, but sometimes they can be very, very helpful, especially on higher time frames. Well, let me see if I can find them. So this is something I've just been testing. I've been looking at to add on extra POIs to my own trading. And for the most part, it's pretty nice. So like for instance here, this would be a fractal demand zone right there, okay? Wick to wick. You guys understand that a little bit? That's what it's showing you. So if you just remember what I just drew in paint, this right here is going to be a fractal, so maybe like a 30-minute, actually much lower. Some kind of fractal accumulation, right? There you can see it. There's a mini accumulation here. It's left untested, so it's almost like you refine it off a higher time frame instantly. And again, like you wouldn't just trade these zones randomly, but had you been watching these zones, especially on lower time frames, because the zones can be pretty small, and you saw something of this nature, you're able to take those to your partials, and your higher levels before they continue breaking down, right? So it's a way to spot hidden, basically, supply and demand zones. So for instance, again, this right here is a supply zone, as you all know. But also, this is a supply zone, and you can notice what that mitigation did, right? Just take a look at that. Wick to wick. You guys understand that? So even though it did technically jump into this one, as we normally do, this is the refined one without even having to refine. Because inside of here, what you're actually viewing is price action that came, took out a low, closed, right? Then came to take out the high, right? And then continued lower without retesting that. So that's what's happening inside of here. So I don't know if I'm confusing any of you, but hopefully that made some sense, right? So in this case, this would just be a normal demand zone. There's no wick. But if there was a wick here, right, that refined demand zone would be this to this. You guys seeing that a little bit? Similarly, right here, right? This is a demand zone right here, and that's the one that actually held here. However, this original mitigation, if you notice, was the wick to wick. Actually, not even. So you have to use this very sparingly, test it a lot, but if you're looking at them from much higher time frames, they can be very helpful in ascertaining certain areas. So like for instance, on a monthly, where did I see one? I actually saw one before end of day on gold, because there was a 5-minute sell we took, right? Might have been in here actually, right? So this right here itself, it was on GU, really. So like notice how price was delivered here. If you take the wick to the wick, that test was that, right? Take the wick to the next wick, the next test was there. right? The wick to the wick. The next test was there. So this is a way that you can literally follow a markup or markdown from an area that might have already distributed, right? Recognizing that these are very, very fractal distributions that occur and are being retested. So test it. This is a concept, right? It's very, very cool. It can help you with a lot more POIs, but it can also confuse the living shit out of you because they happen absolutely everywhere, right? Like this would also be one, considered one right here, right? Wick to wick. So those hidden POIs are just drop base drop and rally base rally. Oh, I guess you could call them that as well. But yeah, I guess you could call them that too. But they're also fractal, very, very fractal Wyckoffs, right? Can you go into your Excel page one more time really quick? Yeah, sure. I mean, you'll see it after the fact, but I just have a pair, time frame, the before, the after, the result, and then the date. So you can always just look back and understand, you know, weekly how much you could have made, right? Like if this was plus 3, so this is, and this was with partials, right? So plus 6.8 plus 5.8 is what? 11, so it's 12.6 plus 7 is 19.6 minus 1, 18.6, right? So 18.6 are our or percent, or divide that by 2 if you're risking 0.5% in a week, right? Based on how you'd be getting into these trades and stuff like that. So this is a very solid way to keep a journal, very simple. Every green thing is just another day started, right? So this is just end of day, end of day, end of day. If you don't take anything, you don't look at it, and that's pretty much it. But definitely try to play around with some of the hidden POI type things, but still I think that using the overall POIs is better. Like here, in this case, if I was looking for continuing buys, because like I said, even though this has hit our POI, I do think it wants to come deeper into it. Instead of just looking at this zone right here, right, which is technically that refined area, right? If we zoom in on this really quick, which is that refined area right here, instead of looking at that, I'm still going to be looking at this. Okay, so hopefully some of you understood that a little bit. Hopefully it changes some of your trading or helps some of your trading, or potentially helps your plan or whatever you're working on. But it's just another thing that you can add to your thing, right? Because there's always different concepts and materials you can use to add to your overall strategy. If you don't like them, you don't have to use them. I myself, I've been looking at them, but I have not been using them to trade specifically just yet, right? Journal name, I love it. Thank you, thank you. So let's take a look at some more top downs, because I know some of you want to look at them. We just finished EU, right? Everyone's good with EU. I'm not even gonna add it to my list because whatever, I don't care about EU right now. We can just watch U and gold for now, and XRP. Let's go up and take a look at something else. I know there's a lot of people that said some stuff. Entries. The backtesting video can help a lot with that. I showed some entries on there that was just based on seeing Wyckoff, right? Seeing the break, looking at where the break came from. In some cases, it was 2 areas, right? Split risk between both of them. First one gets taken out, second one holds, mitigate it properly, right? Entries are just basically looking at those last down moves before the up moves and using them as areas where you're expecting mitigation and continuations in direction. Okay, GU's done, EU's done. Dogecoin. All right, sure, let's look at Doge, whatever. Doge to the dollar. Maybe I've looked at it, who knows? FTX, is that okay? Femex, what's the best one? Do you guys know? Anyone know what the best thing for Doge is, or do they all deliver it the same way? Doge, USD Tether, Bing Bong, like what's the best one to look at it on? USDT, Doge USDT, Doge USDT, Binance, nice. All right, sure, let's take a look. So very easily we can see, I mean, I'm not even gonna go to the higher time frames because it's just such a big up move. We know the higher time frames just look like this and we can't do much with that, but bullish as fuck. We have some mini structure breaks here, right? Supply outer liquidation. Also, for those that asked about the X's, the X's are just breaks of structure. So this would be an X, break of structure, right? It's a liquidation that might come back to test it. And the ticks are mitigation. So in this case, right, if you look at this last down move before the up move, that's what got mitigated here. And you know there's Wyckoff in here, which is fantastic. And instead of having this here now for the rest of my life, I'll just do this. I'll draw in the mitigation like so. And that's just demand mitigation, right? That's it. Ticks are mitigation, X's are liquidations. That should help a lot of you with what I'm aiming for. Now, there's no real area to aim for on the 4 hour here, so I do think that it might even continue to make new highs. Or it might be ready to go lower. But right now, I think that it just wants to make new highs, right? We just continue following order flow. That's what we do. If it is to break down, I do believe it'll start making runs for the imbalances here. And as you'll notice, same thing goes. The imbalances are being created. I mean, not created, but the imbalances that are created are also having tons of liquidity created and resting just above it, so they can not only fill the imbalance but also grab all the orders that lay below these areas if they are to have a lower prerogative before going higher, right? If that does happen, the lowest you can expect to come to would be like here. So this is actually where the hidden stuff actually comes in handy, right? Because we're on a higher time frame, the odds of them really dropping all the way down here, I mean, it's not crazy because it's because the volatility on cryptos is just fucking insane, right? So this might not be as deep as it wants to come, which is when the idea of fractal hidden ones can become very, very helpful, because now you have extra POIs you can actually focus on from a higher time frame, as you can see, right? So this is where that type of sorry about that, my dog was on me. that type of fractal accumulation before the move up can help you in mitigations, okay? And again, you have another one right here, which is why, again, like I said, it's very, very complex just to use these, because you're going to have a ton of them. So just be careful with it. Have larger expectations, and just, I mean, for me, I'd have this drawn in, expecting that price could mitigate somewhere in here, but we're going to see that on a lower time frame anyway. So Doge is just mitigating this and heading higher. It looks like we can take a look at the accumulations that happened here. You can see that we started to put in lows, liquidate them, lows, liquidate them, began to move higher. It looks like we did take out highs, began to shift, and made a run right back for the last mitigation right here at this low, right? And continued higher. Again, liquidated and broke structure on lower time frames here. That's some outer liquidation, and came to run right back in to fill in some zones here. Right now we're breaking even higher. So if anything, just either this or this, which means where can we expect those sells from? We can follow this up to, as you can see, all the liquidity that rests here, coming right up for this last supply zone. That's what we're inside right now. So again, Wyckoff for sells in here is pretty nice, especially since this is pretty much testing this last liquidity grab here, right? So I like sells here, and then partialing along the way at lows, and potentially into lower prices before the new markups up happen. Okay. Whoops, did not mean to delete those. This. Take a look at a 30-minute. What do you think of XRP? It is... I want it to come here. It's accumulating right now. Maybe if it has breaks, you take some buys up, but I want to see it come into here. They'll just these lower levels. Is there like daily ones? Nothing else on that, but again, they're all these things kind of move, I think, the same way. So just kind of use the markup on like Doge that I'm doing here and form a bias on those as well. Overall, if I was to be looking at this realistically, I would have more likely than not been watching this for buys, and might have been looking for this for buys, but it's really shitty because it's been mitigated so many times, so might have missed this. But there's probably buys in here that I would have caught and either partialed or broken even on. We can go take a look at that actually. Let's just go take a quick look on what happened inside of there. Gold, we spoke about at the start, I believe. Yeah, so as you can see, even though it went way lower, you can see we did have Wyckoff in here. It's very ugly, but overall, let's just use mentfx blocks in this case. It's easier. Last move down, comes up, validates it, right? Starts making a move down. So this is all mentfx block, and it comes deep enough, right? Never validates it. Finally makes this low right here. So that's a new mentfx block. When does it validate it? Right here, right? Take the 50. Notice where that wick went. I think it went right to the 50, didn't it? Let's go from high to low. Drag that out. There you go. Okay, double mentfx block confirmation shows you the ugly Wyckoff in a much easier way to see, and takes you higher. And what do? You partial, and I'm just looking at inefficiencies, and you might either partial or lock in this and taken out here, right? And then you start looking for the sells down, and you see this maybe as a ment block, right? Validates it. Oops, shit, sorry. validates it, right? Starts coming up into it. That's already a good enough retracement. So you take this as the next one, waiting for it to validate it. Where's it validated? Right here. Take the 50% of that, right? Selling in here, and there's your breakdown again. Mitigating yourself, or at least partialing at lows, and wherever the fuck else you want to find it to go down into, right? But there's your ideal of how you can still be wrong about where it wants to go from and still be part of the move when it does occur, right? That's how you use ment blocks. So again, every webinar we've done so far, we've spoken a little bit about ment blocks, and hopefully it's sticking with a lot of you. Quick question: when using MB, is it necessity to use them, or am I okay with just using Wyckoff as a confirmation? I myself just use Wyckoff because I now see the MBs, but I also just see the Wyckoff, right? Like, I don't even label the Wyckoff anymore. But honestly, MBs are the same as Wyckoff. They'll even sometimes show you the Wyckoff better than Wyckoff will show you it itself, right? Like right here, it's really hard to spot the Wyckoff, but the MBs just showed you this entry perfectly, right? And actually got you literally to the pip in on this right here. Is Wyckoff irrelevant if it's not a POI? Yes, for me it is, because like we always speak about, Wyckoff happens absolutely everywhere. So I speak about that in section 3, and if you try to just trade Wyckoff, you will really get confused, because like I said, it occurs everywhere. So unless you have a specific area that you're looking for it in, and then trading that specific area, it's going to fuck with you, right? Let's go back up, take a look at some other things that people wanted to look at. As you mentioned, trading ranges, we've talked about that a little bit. Do you correlate DXY? No, I do not. GJ. Okay, so a lot of people want GJ. I'll do GJ as my last one, and then I'll go through some questions, okay? Because we're about 50 minutes in. So we'll look at GJ as the last one, and I'll look at some other ones over the week as you guys send them out and stuff. But I want to make sure I answer some of these questions here. So let's go to GJ. Let's delete some of the stuff we have on here. Once it loads, there we go.